In today's video, I'm going to be explaining the biggest problem with altcoins right now. This is a massive issue in the market, and it's actually the number one reason why altcoins have been underperforming over the last few months. So to understand why this has been the case and what happens next in the altcoin market, you need an understanding of the concept that I'm going to present to you in today's video. And once you understand this concept, then of course, you will make much better decisions when it comes to selecting the right altcoins to buy and hold this crypto cycle. And as we know, asset selection in the 2024 cycle so far has been make or break. It's not like 2021 where you can just buy random altcoins and everything is going up at once. You have to be much more selective, and that's why I believe today's video, although the thumbnail and the title may be bearish, is one of the most important videos that I've put out on the channel over the last couple of weeks. So sit back, relax, and hopefully you learn something and it can make you a better crypto investor and trader. Before we get into the meat and potatoes of today's video, let's firstly just do a quick market update. Bitcoin on the weekly is still just above this 64.7k level. It is flirting with danger on the weekly, although we do have another 3 days to go to close out the week. It has been choppy price action for Bitcoin so far this week. On the daily chart, we did lose this mid-range level at 66.5. You do have this other level on the daily, which is of importance at 64,000 as well. But in terms of bullish price action in the market, you do want to get a reclamation of that 66.5k level on the daily if you do want to be targeting range high for Bitcoin, which is around 73k. But for now, Bitcoin relatively indecisive, looks like it wants to keep going lower. But of course, we do have this key support level at 64. If you break that support, that is the last support until the range low at 60,000. However, we did see some signs of a reversal. What happens today is going to be up to the markets. Recently, what's been happening is you've seen a pump during the Asia hours. It's taken price 2 to 3% upwards, and then the American trading hours have subsequently dumped the price on the US Open. It's been happening for the past few weeks with these weak US Opens. Why did Bitcoin reverse just a tiny bit yesterday after it did have a reversal? Well, there were a couple of reasons. At least on the surface, these seem like valid reasons. You had MicroStrategy acquiring an additional 12,000 Bitcoin. Pretty much as soon as they announced this, the market did start to dump. It's funny because although at face value, you might say, oh, Michael Saylor buying more Bitcoin, it's really bullish for the market and you think the market would pump. It actually often does dump when he announces this because it kind of explains or assigns at least, some sort of explanation behind the bid that we saw in the days prior. And once that information is now public on the market does have a tendency to reverse. At least that's what we're seeing here. We also saw, and this was obviously the big news on Twitter yesterday, it was pretty much everywhere, that the German government is selling Bitcoin. You can see they have a wallet with 3 billion Bitcoin in that wallet. They sent 130 million of the 3 billion to exchanges yesterday. As you can see on Arkham, they're still holding the remaining 3 billion. This caused a lot of panic. That's when the market started to drop. Although I do have a counterpoint for this, and I don't believe it's a reason to panic, and it's the fact that this is $3 billion of Bitcoin. They're very unlikely to dump this all at once. Even if they have a full intent to sell this entire stack, they're likely to do it over a period of weeks, if not months. And $3 billion in a market like Bitcoin, which trades $20 billion of volume per day, is not a significant enough amount of liquidity to see a major price dump, especially if these funds are spread out over a period of time. I highly doubt they full stack jeet $3 billion onto the market. And even if they do, the market will be able to absorb. But we do know narratives in this market tend to drive price, and the whole narrative of, the German government is selling Bitcoin certainly wasn't a bullish way to start the morning in the US trading hours. But interestingly here, you can see Horse does this tweet saying, no need to invent narratives about Germany selling Bitcoin that caused this move. Just open a tick chart of Nvidia, SPX, and Bitcoin from the New York Stock Exchange Open. And you can see that after the initial relief bounce on Open, pretty much everything did end up bleeding for the rest of the day. So he's basically saying, look, it was a market-wide sell-off, and you can't fully attribute this to the whole German narrative, although it makes for a great story, of course. And then in terms of an altcoin update, Total 3 is still above this major support level at the 560 level. Technically, this is a higher low compared to the previous liquidation wick on April 14th if you are on the daily chart, but we did break below the daily EMA, so flirting with dangerous levels right now. You do have this major support level, which is, in my opinion, a pretty decent buy zone for a lot of altcoins, as long as that corresponds with individual altcoin charts. On yesterday's show, I went over some of the altcoins that I am currently leaning towards in the market. I recommend watching the shows from this week if you've missed them, because there is a lot of valuable information pertaining to this topic in those videos. But the short of it is, around these levels during these major liquidation cascades, if you are at a high time frame level for a quality alt, I actually think from a macro perspective, looking at the remainder of the year, that is a decent opportunity to accumulate that position. Of course, there's no way to know exactly what happens over the next few days, and I'm not in the business of really speculating on what happens over the next few days. But we came here not just for a market update, but to discuss a really, really, really important dynamic right now in the market, which is affecting price action overall. In front of you, you can see the weekly performance for a lot of altcoins. Many alts like Starknet, Injective, WIF, Stacks, Bonk, Arweave, Celestia. A bunch of coins are down 15-20%, and over the last month, you have many coins down 30, 40, 50%, and these aren't just small cap coins. I'm talking, major coins in the market that are bleeding 40, 50%. And it seems like every time Bitcoin makes a move to the downside, and this is verifiable by the data here. So from the high to the current level, Bitcoin dropped 13%, and on total 3, from the high to the current level, it dropped 25%. So it seems like every time Bitcoin makes a move to the downside, altcoins move significantly more to the downside. But when Bitcoin pumps, alts struggle to sustain a pump, apart from the rally that we saw in March. So it's basically operating on relative weakness versus Bitcoin for the entirety of the altcoin market. Now, a lot of people are wondering, why is this the case? Why are altcoins bleeding? And there's actually a really interesting answer behind this, which I believe holds the key to A, how we're going to get out of this potentially later in the year, B, how you can actually benefit from this and make sure you're not in the weak altcoins, and C, it explains why I think the biggest dynamic shift in the altcoin market is currently underway, and that's going to have major ramifications for the market. So I'm really keen to dig into this logic here. By the way, thanks to everyone that tuned into the Miles High Club charting stream earlier today. Basically, me and Paradise, the amazing low time frame trader in the Miles High Club, got together and we went through a bunch of charts, almost 2 hours of just charting your altcoin setup. So this is something that I am bringing to the Discord every single week. Me and Paradise are basically going to take your chart requests. So any charts you have, we're going to chart them live. And I love the mixture of fundamental discussion, which came from my side, but also aligning that with the technicals on Paradise's side. So if you are in the Miles High Club, I recommend going and watching this video again, because there were lots of alpha and altcoin setups for the coming weeks, which could come to fruition. And we know Paradise has been absolutely smashing it in the group over the past couple of weeks with his low time frame trades. He runs what we call in the Miles High Club the Paradise Island, with his market commentary, crypto trades, setups, etc., alongside all of our other amazing content creators in there. For example, Doc, who's our high time frame trader. He's more of a swing positional trader for those that like to trade on the higher time frames. We've got Fabian, who's our altcoin specialist in the small cap realm. He's also really in tune with the macro side of the market, so predicting potentially how the market is going to respond to macro news. This obviously helps with positioning, and there's a bunch of stuff we're doing in the group as well. We've got giveaways going on at the moment for the top members. We've got IDOs coming very, very, very soon. In fact, during this next month, we're going to be launching some of the first IDOs in the Mars High Club for members, which is going to be absolutely amazing, alongside, of course, a bunch of other research there. The reason I'm saying this is because this video may be the last chance you have to join the waitlist if you've been thinking about joining, because the waitlist closes in 4 days, but we are very close to filling up the 100 spots here. So if you have been considering joining the Mars High Club, which is my exclusive community for crypto alpha, we have the best analysts of the game in that group. You can click the link in the description and sign up for the waitlist. The first 100 will be let in 4 days' time, and then after that, the group is going to be closed for at least another month, which basically means if you want access to all that stuff that's coming over the next month, like the IDOs, like the weekly charting streams, and something that I'll announce later in the video, you're going to want to be in the group for this next month. So I'm giving you a chance here using the link in the description if that is you, because once it's closed, it is closed. So let's get on to the issue at hand. And as I mentioned before, this basically explains why we are currently in the predicament that we are in terms of altcoins showing relative weakness, not really pumping when we do get bullish catalysts, and then when we get bearish headwinds, they're selling off more than Bitcoin. But to understand the full extent of why this is the case, we got to go back. We have to go back all the way to 2021, because the reason this is happening doesn't actually lie in the liquid markets. It lies in the private markets. So back in 2021, you can see that the crypto market was in a frenzy. This is the stablecoin index, which is indicative of new capital coming into the crypto market. New capital was flooding into the market. People were in absolute degeneracy mode. And in fact, so far this cycle, we haven't even come close to the amount of liquidity that was there in 2021. It was absolutely insane. As a result of this increased sentiment, increased risk appetite, that created new opportunities, both in the liquid market and the private market. And of course, the private market, aka the VCs and the insiders that are funding a lot of these projects, saw a massive uptick. We can see that the highest amount of funding happened during the last bull run, where VCs were pouring unprecedented amounts of capital into the crypto space. You have to remember, founders, so people that are starting projects and teams, and VCs are just like retail. They're opportunists. The uptick in investment is a natural capitalistic response to market conditions, which were clearly very bullish. Now, what happened in terms of the VC market? We saw a peak in the amount of VC deal count and VC total dollar investment in Q1 2022. The crypto market peaked in November 2021. So it's interesting that there was a slight lag there, largely due to the fact that the altcoin market still looked okay heading into Q1 2022, where the VCs invested record amounts. I'm talking $12 billion invested during this quarter alone into the VC/private market, and over 1,200 new deals. So these are new projects being born, coming onto the market and getting funded by VCs. Now, not every project gets funded by VCs, but the main ones do. The low float, high FDV projects you've seen launch recently, they're all funded by VCs in order to be assigned such a massive valuation, because there's huge development costs attached to that. But what happened after this? Well, VC investment peaked in Q1 2022. But if you look at Q1 2022 on the chart, this was pretty much the beginning of the end for crypto. There was one last relief bounce before it was down only. And crypto traded in this sideways bear market crab, crazy price action range for 500 days. If you are a project founder and you raise capital here, and VCs invest in your project here, or here, or here, as we can see, lining up with the VC investment chart here, are you going to launch while the market is bleeding and bearish and scared? No. So what are you going to do? You're going to delay your project. Let's say you raised at the top here. You're going to delay until here. You don't want to launch because the market's still bearish. You're going to delay it until here. You don't want to launch because the market's bearish. You're going to delay and delay and delay because no one wanted to launch during FTX or Luna or Voyager or Celsius or the slew of other negative headlines in the market. The first time that the market started to give you conditions even applicable to launching a new token in the market due to the sheer lack of liquidity prior to that was here in November 2023. This was the first time that the altcoin index broke out of its range that it was in for 500 days. This was the first moment where projects could even consider launching a project. And remember, a lot of these projects were funded in the last bull run. They take years to develop, but obviously, even if they were developed, they don't want to launch in crappy market conditions. So let's say you're a project founder / VC, and you decide in November, once the market is starting to look better, that you want to launch. How long does it take to line up a launch? Well, it takes roughly 3 months, 3 to 4 months, because you have to line up the exchange listings. You might do a last minute investment round. And then oftentimes there are delays close to launch where you might get pushed back 2 to 3 weeks due to other listings. The market might be bearish on the week you want to list and you might push it back a week, etc. So it's around 3 to 4 months from the decision time of, okay, we're going to finally list our token to the time of listing. So 3 months from November, let's do the math. December, January, February. Look at this. The time when most of the new altcoins were launching in the market was February and March in this period here. Pretty much the top of the market. Why? Because it was basically unfathomable for projects that raised in 2022 or even 2023 to launch during these bearish market conditions. They had to wait until 2024 to decide to launch. Many projects are only launching now because it took them 6 months to line up their launches. 3 to 4 months is the average time it takes. Many projects took 6 months plus. What does this mean? It means that you have a record amount of new tokens coming onto the market. As you can see in front of you, we've had over 1 million new crypto tokens launching since April alone, half of which are on the Solana network, but the graph in front of you isn't. The graph in front of you is just EVM, which discounts a lot of the meme coin frenzy that's been happening on Solana. That is its own ballgame. Today's argument that I'm making is structured around the VC and private market. It's not talking about the meme coins, which of course have created their own subsector of dilution in the market. So we've had a record amount of tokens launching in 2024 as VCs that were waiting and waiting and waiting, and founders that were waiting and waiting and waiting finally decided to launch their tokens. Not only that, but you have opportunists that realized the market is now starting to look better. Let's launch a token. Let's start a crypto project. So many new projects that weren't even planned in 2023 were basically born out of the woodwork in 2024 as an opportunity to extract capital. Whether this is a meme coin, which is a low effort thing that you can launch in pretty much a day, or a slightly higher effort thing where, you hire a few devs, you build a product for a couple months, and then, you get some VC backing and then you launch a product, which is also a very common model. And this isn't something anyone would consider in 2023. Why would you start a new project in a bear market? There's no liquidity, there's no interest, you're not going to perform well. But the irony is, because everyone assumes a token launch is going to perform well in a bull market, everyone launches. But by everyone launching, by the number of crypto tokens exponentially increasing in the market, you're actually counteracting the bullish market conditions because you have this additional supply coming onto the market. And although there is more liquidity than there was in a bear market, that liquidity still isn't strong enough relative to 2021 to handle the amount of new launches. But it gets even crazier because if you look at 2021, there was only 443,000 official launches that were registered on CoinGecko. In 2024, there's 2.5 million tokens, and almost half of those tokens were created between 2023 and 2024. And because we know 2023 was not that bullish, most of these tokens launched in 2024. So you've basically doubled the token supply, not including these meme coins, because CoinGecko won't list a lot of these DEX tools, Solana memes. You've pretty much doubled the token supply in a matter of 6 months because people saw, oh, crypto's pumping. This is my opportunity to finally make money in a space that's been dead for 2 years. And then you get this crazy dilution. Meanwhile, you have the stablecoin index barely moving. The inflows into the market over the last 3 months have been negligible. They've been very strong in terms of the Bitcoin ETF, and it's been a Bitcoin-led cycle so far, but it hasn't been so strong in terms of the altcoin market. So even though, yes, liquidity did increase slightly due to the Bitcoin ETF, you had double the amount of supply to completely counteract that new liquidity coming in. And you also have unlocks from the previous tokens that launched in 2021, 2022, and 2023 stacking on top of each other. If you look at token unlocks, you can see here, you've got significant unlocks for Solana, WorldCoin, AVAX, a lot of the new coins as well are now starting to dilute, Sui, Aptos, DYDX. Token unlocks compound. The more tokens that launch in the market, the more aggregate sell pressure you have. So your sell pressure per day might be 10 million, but every year it's stacking. It's growing to 20, 30, 40, 50. And then in 3 years' time, you have $200 million of linear unlocks per day because these projects are assigning like a 3 to 4 year vesting schedule. So you have a combination of a bunch of new launches, a bunch of unlocks stacking on top of each other, which equals sell pressure, combined with not a lot of liquidity coming into the market. And then you look at CoinGecko and you wonder why, and I'm just going to go into the majors now, a lot of the majors aren't performing. Now, a few are. We're going to get into the ones that are later in today's video, but you look at XRP not really performing. You look at Cardano not really performing. AVAX not really performing. SHIB not really performing. Most of these aren't. Like, most of the majors aren't really moving. They will move. They'll have periods of moving, but overall, they're struggling to match it with Bitcoin. Only 8 coins that were around in 2022 have actually outperformed Bitcoin since FTX. Only 8. And there are millions of tokens in the market, as I just showed you before. Now, of course, granted, in 2021 and 2022, only 1 million of these were created, not 2.5 like we have now. So there are outliers that have recently launched, like WIF and Pepe, which have outperformed Bitcoin, but the vast majority of the market hasn't. And that is due to the point that I just made. And you have to think of token dilution in the market as inflation. So if the government prints US dollars, for example, what this does is it reduces the US dollar's purchasing power relative to goods and services. So now gas is more expensive. Now food is more expensive. Now housing is more expensive. And this is what we've seen over the economy really since 1970, but especially over the last 5 to 10 years. It's the exact same in crypto. If you print more tokens, this in turn reduces crypto's aggregate purchasing power relative to the US dollar. So altcoin dispersion is basically crypto's version of inflation. Token unlocks, new launches, are crypto's version of inflation. And this inflation is counteracting the demand. The new liquidity coming into the market, that is a measure of demand. The amount of supply is counteracting demand. And Basic Economics 101 states that you are going to see a recalibration in prices to the downside overall if that is the case. Now, Total 3 is up. Altcoins have ran. They just haven't ran as much as Bitcoin, and many alts haven't even outperformed Total 3 because Total 3 is a measure of the entire altcoin index outside of Bitcoin and Ethereum, whereas many coins within this basket have actually underperformed the overall index because the index accounts for some inflation. I think it's the top 125. Not all inflation from the lower and mid caps, but at least some inflation. So, firstly, how could things turn around? Because I'm not just making a bearish video for the sake of making a bearish video. I have a point here I want to get to, which is really going to help you. It's not all doom and gloom. I just really want you to understand the dynamics of the market so you can be a better investor. I don't see many other creators, being real with you, telling you the real issues. They talk about altcoins, this, buy that. Do they really understand? Do their audiences really understand the dynamics of the market? That is what I want you to understand. I want my audience to be really clued in with how private markets work, how public markets work, and let's just be transparent with each other so we can actually freaking smash it this cycle. And that's the only way we're going to do it. So how could things turn around? I did a tweet on this. I really think we need more liquid funds in crypto. There are comparatively too many VCs in the market, and what this does is it creates a skew between the private market and the public market, basically meaning VCs are able to buy in, and not just VCs, but insiders, projects, whoever's investing. Even I invest in seed rounds, right? You get it at a much lower price, and then it launches at a much higher price, and retail buys in at the higher price. But then the early investors, they're up significantly, so they take profits, so they're selling into retail who's buying. And this is how the market's worked for years and years and years, and it's also how the stock market works, right? Difference between the crypto market and the stock market is the stock market has a passive bid from ETF, managed funds, and liquid funds, which crypto doesn't have. Stock market has pension funds. Stock market has liquid traders. There's not as much private to public market arbitrage in the crypto market because there's such a divide between private investment and public investment. It really incentivizes you to become a private market player versus a public market player. That's a real problem in the market, right? And one of the ways crypto turns around, and this altcoin situation of too many new launches turns around, is that skew shifting more to public. Now, there has been a big development over the past few weeks, in my opinion, that indicates that this is starting to play out, that this is now potentially the new meta in the market. And it leads me to believe that the days of these easy VC wins actually may be over and this meta may be shifting, and I'll show you why. for many new tokens, buying in the public market has actually been better. And this is really exclusive to the last 6 months, because in the last bull run, it was very skewed towards private. And at the start of the year, it was as well. But over the past couple of months, I think retail is starting to realize the jig is up a little bit. They don't want to buy into these coins, and they're not really bidding these coins, and they're losing faith in these coins, and the airdrop execution is bad, so they're not feeling a part of the community of these coins. Because you can see, Layer 0, raised at 3 bill in Series B. Their current valuation is 3.7 bill. And they have A16Z and a bunch of other massive backers who actually invested at a $3 billion val. And they're locked for 4 years, but the current val on the market is basically what they bought in for. So you could put $1,000 right now into Layer 0, for example, and you will have a liquid 1,000. You can sell that whenever you want. You can trade it, do whatever you want with it. If A16Z puts $1,000 into Layer 0 at the same valuation, which pretty much they did, they're locked for 4 years. So their tokens are going to be vesting over 4 years whilst you have a liquid opportunity. So from an opportunity cost perspective, you win. You have a much better deal than the VCs, right? So right now, the liquid market for a lot of these new launches is actually more attractive. And I get offered a lot of seed rounds as well. And I've been rejecting pretty much 90% of them recently because honestly, if I believe in the project, I would rather buy on the open market after it launches, because then I'm not locked for potentially months or years, and I'm able to trade liquid at a pretty much a better price, a risk-adjusted price, because even if you're getting a slightly better price in private markets, if the public market premium means that you have liquidity versus waiting for 12 months, it's actually worth just paying the slight premium. We can see Wormhole as well, raised at 2.5, its current value is 3.6. ZK Sync, raised at 1.25. This is slightly better, but still not great, 4 bill. A 3x, if you're locked for 4 years, it's pretty terrible. You could have invested in Bitcoin in 2022 when they did the raise and hit a 3x that way, and you've got a liquid investment. And then Polyhedra, ZKJ, raised at 1 bill. Their current value is 1 bill. In fact, this will dip below, in my opinion, and probably just based on the price action. And that'll mean that these VCs are actually down and locked. So the days of the easy VC wins are over, which in my opinion is good for the market. What does this reflect? I think it reflects the market shifting. Retail is realizing they don't want to play this game anymore, and that's why they've started to favor the meme coins. Projects have been much too aggressive, raising at far too high valuations, and I believe what this is going to do is it's going to shift the market and force these projects to launch at lower valuations, giving people the ability to buy in at lower prices, like Solana at 100, 200 million last cycle. Like pretty much like Ethereum when it first launched. I know that was an ICO, slightly different, but still. Like you had the opportunity to get into these coins early at sub-billion dollar market caps, whereas now a lot of the tokens launching, they're instantly getting assigned a 4, 5, 10, even 20 bill in the case of Starknet valuation. And that's not fair because there's no price discovery happening in the public market. It's already happened in the private market from the VCs. So nature is healing in this respect. I do think the market is starting to shift, but this was the point I highlighted in my thread that we need more liquid funds and there are too many VCs. How do you get more liquid funds? Well, it's all based on incentive. If people feel like they have more of an edge in the liquid market, they're not going to skew so much of their time and attention towards the private market. Now, you need the private market, by the way. I'm not shitting on VCs. Private market is so important because you need funding to create great dApps. You need funding to innovate. You need funding to create products, right? You need VCs to steer the direction of these products. But when it becomes too exploitative, consistently over time, retail gets jaded and it starts to have an impact on liquidity in the market, given the amount of supply coming on to the market. And the stats are in front of us. Portal, down 80% since launch. Starknet, down 64. Omni, 50. Saga, 80. Marvia, 40. Alt, 45. ENA slightly better, but still 20. ZK Sync, already 15. Layer 0, already 28. ZKJ Polyhedra, 65%. Wormhole, 73%. And that's because they're low float, high FDV tokens that are launching at valuations that are frankly way too high. The market's realizing this. There's no demand or appetite to bid at those levels. Price discovery's already occurred, and then it's down only, and then you can't community build, right? Because the chart looks bad, the sentiment's bad, and it takes, like, you're pretty much starting the race 100 meters behind if a project, in terms of community building, is having to catch up from a crappy launch. Much better if you just have a good launch, onboard the community, have a really rock-solid base, and then build on top of that. So that leads me on to a point I want to make here. What kind of coin should you be looking for instead? And what should projects value in the market to get out of this low float, high FTV, down only paradigm that we've been seeing? Well, firstly, projects you invest in should have a clear narrative. A clear narrative. Look for leaders of their respective sectors in strong trends, whether that be RWA, whether that be AI, whether that be gaming, whatever it is, make sure they have a clear narrative. Secondly, they need to have a clear differentiator. Are they the 10th layer 2 launching in the market this month? Or do they have a clear differentiator / USP? Is their tech that much better that it will incentivize devs and users to use that product over other products? Are they offering something that has never been done before? Or are they massively improving upon an existing crypto product? And is there demand for that use case? If that is the case, you're in a much better position than just launching copycat infra blockchains like we've been seeing over the past few months. And that's another reason why dilution has been so heavy-handed, because a lot of these projects are carbon copies of each other. They're all ZKL2s, they're all L1s, they're all DEXs, like they're all the same type of products with no real innovation. And by the way, the underperformance of these launches actually causes innovation, because it signals that the market's not going to put up with no innovation. The market needs to innovate, and this is how efficient markets end up developing. Crypto is an inefficient market, but it becomes more efficient over time. And this is capitalism at the end of the day. Like, liquidity and financial demand is going to drive what is created, which I actually love, because that is how markets should work. 3, clever tokenomics must be part of the equation here. Clever tokenomics in terms of, are you providing additional utility to just being a governance token? And do you have things like buybacks and burns? Are you implementing measures where like staking is really enticing for retail, which means you're going to have the circulating supply reduced? That kind of stuff can help price appreciation, and price appreciation is good for point number 4, which is community building. There's no better endeavor in the market than the price rising for building community. Communities are driven by price because people are driven by money. And strong communities are built off price appreciation of tokens. So you need to have the first 3 points in check if you want to have number 4. But number 4 can also be done through things like valuing community, listening to community, being funny, embracing crypto culture, being memeable, not being too corporate. And if you have a really clear narrative in USP, you might just get the community anyway. And point number 5, and this is a very important point to make for the traders and investors out there, is low inflation. So ideally, you have a token with relatively low inflation. Either that means you launch with a lot of the tokens circulating, or the time you take the trade to the time you exit the trade, so the time horizon window of a trading opportunity, there's low token inflation during that window. Let me use Ondo as an example. Ondo is extremely low float. A lot of tokens are going to be unlocking in 2025 and beyond. However, if your trading window for Ondo is the next 5 months, because the circulating supply is so low and because there's barely any inflation, that is likely to be a profitable trade, and it has been. Like, that's pretty much why it's been pumping. Really low circulating supply and no supply pressure. Conversely, a lot of these new tokens that have been launching, they have a lot of supply pressure. They have the initial airdrop, so they dump, and then, you have the private round unlocks, so they dump, and then the VC unlocks begin and they dump. VC unlocks aren't the only type of unlocks which affect the market. There are also like advisory rounds, other sorts of private rounds. There are other measures as well, like airdrops, etc., which also increase the supply. And I actually think a lot of projects are going to like copy this Ondo model going forward of maybe not even doing an airdrop and just withholding that supply. Only so long though, you kick the can down the road, because eventually you're going to have to release supply unless you release it up front. So the Ondo strategy and the Celestia strategy that they pulled as well, it works really well for short-term price action, but probably not great for long-term community building due to the future dilution that you get. So when you are trading tokens, make sure you're buying into tokens with a clear narrative, clear USP, clever tokenomics, strong community, and low inflation, or at least low inflation during the trade window. Now, what I'm going to be doing in the Mars High Club is in a few days' time, corresponding with when the next month ticks over on the 26th of June, is posting my top 10 low inflation altcoin picks. So these are altcoins which are pretty much fully diluted in the market, because I do think there is going to be a meta now where people don't want to go for the tokens with crazy unlocks, and they want to go for the tokens that aren't diluting a crazy amount of supply. But remember, due to the total aggregate supply in the market continuously increasing, you must have the first three in order to offset some of this supply pressure. And those are the tokens I'll be focusing on in this report that I'll be posting in the Mars High Club. If you do want to sign up for the Mars High Club, there is a link in the description below. The first 100 people to join the waitlist will get access to the group. This may be the last day, considering it is only limited to the first 100 spots. And last time I checked, they were going super quick, that you can join. And then after this, we're going to shut it for another month. So you won't be hearing about it again for another month, but all the people in the community will be getting access to all the amazing alpha that we have in here. And to everyone that is already in the community, thank you so much for being a part of it. It's been absolutely amazing to grow with you, to provide value back to you. And we're only going to get better and better with the new IDOs, giveaways, and initiatives that I can't talk about quite yet launching over the next month. And I just want to summarize that this isn't a video that should make you bearish. It just raises your attention to the current dynamics of the market and highlights the types of coins that you need to be focusing on. I think that is a super important takeaway today, that yes, the meta is slightly shifting, but there is a strong reason for the underperformance of altcoins. And that is also the reason why sentiment is bad and why retail isn't coming back into the market as strongly as it did in 2021. And it kind of goes to explain the current predicament that we're in, and also holds the key to actually coming out of that predicament. And hopefully some of these points can help you when you are looking at altcoins to be a little bit more selective about, especially when it comes to the tokenomics and economic side of things, because I think a lot of people invest in coins purely based on narrative, but you also need point number 3 and point number 5 ticked off if that is to be a good investment, especially if we're talking about longer time frames. Obviously, short-term investing, it doesn't matter so much. Over a 6-month period, it can matter a lot, and it can be the difference between you failing and succeeding this cycle. I'm going to see you in the next video. Hope you have a lovely rest of your day. Peace out.